Good morning. It's Friday, July 19th, about 6 a.m. Central Time. So, overnight, the precious metals are weaker after yesterday's slow and steady sell off. Those are the worst markets because it's almost like boiling the frog. It's failure to act against a problematic situation that increases in severity until it reaches catastrophic proportions. So, if you look at the way precious metals trade, most of the volume in action, it doesn't matter what metal it is generally from about 6:30, 6 o'clock a.m. Central Time until about 12:30 in the afternoon, and that's when all the volume takes place. When you see the type of sell-off that we see where it's after that 12:30, it's more like 1:30 on. That gives you some clues as to who's doing the selling. And with the volatility in the U.S. equity markets, the tops that are being called on things like the Nasdaq, things like the S&P 500, you're going to see investors start to throw in the towel. And that type of late day bleeding off is them just liquidating any kind of asset class that they have here. So I would expect to see some ETF outflows on the precious metals because of that volatility in U.S. equities. Now, the dollar index, if you look at that, I talked about that because we had the ECB meeting, is that the last time it reached that kind of double bottom and we bounced back up in the dollar, gold futures fell about $80 over the course of that day. It was another Friday sell-off. So yesterday we started to bleed off pretty hard, and then today we're down about $42. Now, many of you going to work and starting to open up to various programs and things like that are going to notice that it's not just you, it's computer systems failed across the globe, taking down services of like airlines, banks, even the London Stock Exchange is down. I got a couple calls about that. There's a widely used cybersecurity program. It's one of CrowdStrike's Falcon Sensor threat monitoring product. It needed an update, and it goes through Microsoft, and it caused the Windows operating system to crash. So a lot of programs are probably not going to work at the moment. Now, flipping back to other things on the rate cut hopes, because that's something that I'm really watching here, is that I believe that officials are becoming increasingly more confident that price stability is in sight, and they're laying the groundwork for a coming rate cut. I don't think they're going to cut rates in July. Many people are calling for that. I think that he'll give great hints at that July. It's the July 31st meeting, I believe, is when it takes place. 2-day meeting. I think it's on the 31st. He'll lay out the groundwork that they'll cut rates at the next meeting. So if you look at the probability using the CME's Fed Watch tool, it's like 98% chance that they'll cut rates in September and then also again on December. Now, what I usually do, and I recommend you do this on Friday with whatever asset class you are, because it's generally a wake-up call for different people, is to look at where the product is that you're trading on the week, and you can kind of tell on a weekly basis whether or not you're on the wrong side of the trade here. So looking at the scores on the board going from worst to best, natural gas down 9% on the week here, so it's been hot, kind of cooled. The temperature has just been right here where natural gas demand hasn't been surging. And then if you go just above that, remember there were threats against China with the tariffs, and that will impact their GDP. And what do? They are the number one consumer of copper. So copper down 7%, breaking some of the support levels. Copper is an industrial metal, and so is its sister silver, which 54% of it makes up industrial metal. That's down 5%. So these are like, if you pull up the worst performing commodities, it's natural gas, it's copper, it's silver after that. Thirdly was going to be platinum. There's some talk about EV vehicles and things like that. Trump would pose tariffs on EV vehicles coming in. He would end these mandates. He would end these green energy, deals and things like that. It's going to affect some of the platinum. And then finally, gold. Gold is unchanged on the week here, so it's just kind of hanging on. It did make an all-time high this week. A lot of times when you get all-time highs, you're going to see people take profits on that. You saw the dollar index bounce off the lows. You're seeing 2-year treasury yields climb a bit, but they should be capped on what they're climbing up. The liquidation in other metals will probably cause people to liquidate some of their gold holdings. And then finally, the best performing commodity out there is the volatility index. Now, when the volatility index is the best performing commodity on the week, this is a oh crap moment for people. So that's why the US equities are getting smoked right now. So the rotation happened that was pretty hard and furious out of the Nasdaq into the Russell, into the Dow, out of the S&P. And we see this big disconnect and breakaway there, and that's the reason why some of these products are selling off here. It's just a lot of fear in the markets. Now, if you look at the silver market, silver did break to a neutral trend on my system, meaning that it took out some of these previous lows, some significant lows, like the 10-day low, the 20-day low, things like that. We broke it out to the upside, 31.79 over a 2-day period, and then we consolidated from there. We needed to break out over 32 and 32.50, so I told a lot of people, kind of be patient here at the moment. Now with this pullback, we're coming back down to like longer term support. So if you look at like a 2-month chart or something from like all of June, all of July, just, you don't have to look at multi-year charts. Just look at like the last couple months. Where are we at? You could see that we were kind of bouncing back and forth. We're back at the lower end of the range. So what we don't want to see is for it to continue to break down. Then it could be testing like the 200-day moving average. So old support, new resistance. So 50-day moving average is now going to be the resistance where it was the support. 31.76, that's your new breakout level. So if you're on the sidelines, the way that I usually probe the water, remember, you don't want to jump off the diving board into the deep end if you can't swim. So what you do is you want to kind of wade out there in the water. So you look at where the market's at right now and you say, okay, if I'm bullish on silver, you look at a call option going farther out. Calculate a risk. You're not going to be triggered by volatility moves and things like that, especially to the downside. You wait then again for, if you're going to test it on futures, you put a stop loss on because we're going into uncharted territories below. You got to come up with an arbitrary number. So you're going to risk a defined dollar amount, say $500 on a 1,000-ounce contract, or $5,000, whatever your particular risk reward type scenario, whatever you're comfortable with. So you would do that secondly, and then thirdly you'd wait for strength. So adding when it goes above the 50-day moving average, pulling those stops up, adding on a new breakout, 31.76, and then what you do is you take the average true range, which is 94 cents divided by 2, and you'd add an increment going up. So that's just the strategy that I see many successful traders use here. So it's no sense on just going all in at a particular price and then risking it all. So that's just getting a little bit in a strategy. I could talk more with you guys about it. I'm always fascinated by strategy. One of the red flags that I have with the silver market this morning is that DMI minus is crossing over to plus to the upside, which means that the momentum of upward versus down days and the way people are shifting and positioning is going more towards neutral and then looking to flip to bearish. Stochastics are rolling into oversold territory, which is not good because it could be entering into a bear market. You guys don't want to hear it, but it's just the way that it is. So you got to take the market as you taketh and you giveth, So you got any questions, give me a call. Hopefully this Microsoft thing will be worked out pretty quickly and we can get the ball rolling here. So give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.